Hello, you're watching Dukascopy TV. I'm Ben Jones. GDP growth for the US has gone up to 3.6%, even with a big fall in consumer spending. Joining me on the line to talk about this is Joseph Lake from the Economist Intelligence Unit. So Joseph, can we begin by getting your initial reaction to the data? 3.6% is a substantial amount of growth. Did you expect anything like this, and what can the growth be attributed to?
Yes, the US economy performed surprisingly well in the third quarter. It grew at the fastest pace it has grown at for the last 18 months, and really this confirms that the recovery remains very much on track. Now, a huge chunk of this growth in the third quarter came from rising inventories as firms restock their shelves. This is generally a positive sign for the economy. It means that companies expect consumers to keep buying and that they want their warehouses and shelves to be fully stocked in that event. However, the main reason that we're not as upbeat about inventory-driven growth is that it tends not to be repeated. So we can expect a softening in the economy in the fourth quarter, all other things being equal, as this surge in inventories is not repeated. And the bad news is that if you exclude inventory growth from this report, then the GDP growth in the third quarter more than halves, which is quite worrying. So a second bright spot, which I'd like to talk about just before some of the reasons for caution, was the revival in spending by state and local governments. Now, most of these jurisdictions have had to slash expenditure in recent years to balance their budgets, and they've been shedding workers as well. But the worst of these cuts seem to be over, judging by this latest report, and state and local spending is once again supporting the economy.
Now, one potentially worrying aspect regarding this report is the fact that consumer spending is at its lowest since Q4 of 2009. What are the implications of this?
Yes, the headline growth rate of 3.6% sounds great, but this report really highlights the importance of looking at the details, and that was much less reassuring. So as you say, consumer spending grew by the slowest pace for almost 4 years. Now, consumer spending makes up around 70% of all economic activity in the US, and this slow rate is really preventing the US from growing at a much faster rate of growth. However, we're quite quietly confident that it will pick up in the fourth quarter, and the data from October and November has been much more supportive for consumer spending. So auto sales this month, or rather in November, were 16.4 million. That's the highest level that we've seen since before the financial crisis in early 2007. And the ADP jobs numbers for November were also the highest that they've been so far this year. And these two factors are going to really boost consumer spending in the fourth quarter. So I would say that on balance, the US economy seems to be navigating most of the obstacles in its path, though it doesn't look like it's poised for a major sustained upward swing, and we expect growth to continue to go at this moderate level.
And finally, looking ahead, what are you expecting from tomorrow's jobs report, and how do you see this affecting the US?
The labour market has performed particularly well in recent months, and we expect a similar picture from tomorrow's jobs report. So US employers created 204,000 new jobs in October. This was far better than most people expected during a month in which the country suffered through the government shutdown and the fiscal crises. Since then, the labour market data has also been performing quite well. So as I said, 215,000 private sector jobs were created in November, according to the ADP numbers, and that's the fastest monthly rate of job growth so far this year. And the jobless claims this morning also showed excellent news. They fell down to 298,000. That was down from 321,000, and it easily beat the consensus of 330,000. So overall, this job data supports the view that the labour market is improving, and we expect the non-farm payrolls tomorrow, which have averaged around 200,000 for the past 3 months, to post a similar strong number.
Thank you very much for joining me today, Joseph. That is all from me for today, but join us again tomorrow for more updates and exclusive interviews. Thanks for watching. Goodbye.